Hi everybody, Alex Deployer from Expert4x, and today we are launching the Expert4x Topup Calculator. I know a lot of traders have been waiting for this calculator and it is now available for purchase. Just to give you some background, in 2014 we launched an EA that is really going very strong from year to year. It's the double in a day EA, and it's an EA that allows you to enter a deal and top it up in a controlled way to the point that should the transaction go positive, it will double your account. Now, when I say in a controlled way, when you top up, in other words, add to your position, you do it in such a way that it will not cause a loss. In other words, you top up on a break-even basis. So if the price comes back, at worst you can get out is that break-even. Now, that's a fantastic facility because you basically have so much to gain and so little to lose, because you're not going to incur a loss once you start topping your transaction up. So, and that is why this particular EA has been so popular over all of these years. I've also got a course on Udemy, and you can see 7,700 students have done this course. It's got a very high rating, and you can see over 1,000 students have rated this course. So if you're interested in learning more about this top-up technique, certainly go to Udemy. I think I see they've got a special on at the moment, and you can go and do that course in a lot more detail. It's a video course, so it's pretty easy to do, but it also explains the basis of entering a deal and then topping it up on a risk-free basis, then topping it up again on a risk-free basis, and then topping it up on a risk-free basis, and eventually you will double your account. So now what we have done is we have created a top-up calculator. Now, why have we done this? Because we already have a double in a day EA. There are a lot of traders out there that trade on a manual basis, and they've come to us and said, look, we trade on a manual, we don't want to buy an EA, we just want to know when to top up and at what places to top up and that type of thing. So this calculator will do all those calculations for you. It will tell you where to enter and all that type of thing. And what's more, it won't only tell you that, it will actually do it for you. It will actually enter the deals for you. But I'll go through the process quite soon. But this is the calculator. It is an EA. It sits on one of your trading charts, and you can use it whenever you need to use it. Now, let's say you were trading, and you can see I've got a ridiculously high account size here. Let's say you were trading and you saw a deal, you wanted to get a return of $1,000 on this particular deal. So what you would do is you'd say the amount used of I'm not going to use my whole account, I'm only going to use $1,000 of my account. I want 100% return, but I only want to risk 5% of the 5,000, so it's only $50 that you're risking. And I want to do it at an entry price of that number. So this could be a pending order type of thing, or it could actually be the actual price that exists at the time. And I expect this trend that I'm going to be entering to be a 100 pip trend. So you enter your 100 pip trend, you say what your initial stop loss is, and I'll tell you why that's an important number. And then you also say what your minimum stop distance is, because some brokers don't allow stops that are too close to the existing price, and you enter that. And then you say, where do I want to top up? When the price is 35% towards the target, 50% towards the target, and 60% towards it. So that's all you have to tell the calculator. It then rushes off, and it will then collect all the information about the currency that you intend trading. So in this case, it's the pound USD. It then says, okay, you're anticipating that kind of trend, so you're going to use 1,000, 5% of that is 50, and as a percentage of your risk, it's virtually nothing, and your reward is going to be 100% of the 1,000, and of the size of your account is going to be virtually nothing. So, but very importantly, it immediately looks up what the current spread is. Then it also looks up what the spread value is for a main lot. More importantly, and you try and do this on a lot of the platforms, it will look up for you what margin is required for every lot that you want to trade, and it will also look up what the broker's formal stop level is. Some brokers don't have them, others have them, but it will look that up. It will then rush off and then create a plan for you, and it will say to you, well, if you start there and you top up 3 times at those points, then you're going to need so many lots. So it calculates how many lots you need in the beginning, how many for the first top up, how many for the second top up, and how many for the third top up. And it then says, if you do this, your gains will be the following. And if your gains are the following, in this case, it's just short of 1,000. That's how much you'll make on that particular deal. And if you get stopped out at any point on your first deal, you'll always make the risk that you're taking. But on your second deal, you'll actually make $8 profit. Your third deal, you made $18 profit. And on your last deal, if you get stopped out, you'll make $26 profit. So it actually tells you what kind of profit you'll get stopped out at if you follow this plan. Then there's a section called margin of safety. Now, this is the one area that's very important when you're designing your strategy, and it basically boils down to this initial stop loss number. Is you want a strategy where your stop losses are more or less the same. So you can see 17, 17, 16, 16, that's more or less the same. You don't want this to be 20 and that to be 9 and that kind of thing. You want them to be more or less the same. That gives you what we call a balanced strategy. If it doesn't balance, then all you have to do is play around with the initial stop number and sometimes even the risk number to get this to balance. Then it actually says, all right, here are the trading transactions. It then translates the trading plan, which is this one, into actual price levels. So it says if you're going to be entering there, that's the entry price. Therefore, your target's going to be that and your stop loss is going to be there. If you enter there, your target's going to be there and your stop loss is there. So your target's always going to be the same, and your stop losses will vary as you're topping up. So it actually calculates that for you, and if you wanted to, you could manually enter that, but you don't have to. All you have to do, if you're happy with all of this, you just hit that create orders and it will enter those orders into your platform straight away. The only manual thing that you do need to do, though, is when the stop up process happens, you have to move the stop loss. For instance, when that stop loss starts kicking in, that one has to be moved to that level. When that one kicks in, the other two have to be moved to that level. So that there is some manual intervention. This is not a trading EA, it is basically a calculator. What it also calculates is your account size that you required to fund the margin required for this particular deal. And as you can see in the beginning, the margin's not too big, but the margin increases because you're adding more lots and more lots and more lots. And you can see that the margin minus the profit that you've made to date can amount to quite a lot. It's actually more than the account size that you're using, but this is okay because you're using a big account. Now, this is a very important area now that the EU margins have been reduced so tremendously. So this is a very important area, and that's another warning area that you've got to look at. Is, have I got enough in my account to cover that kind of requirement? And then it says your risk and return ratio is 20-1. So in other words, what it's saying, you can actually have 19 of these deals go bad, and the one that goes well or positive will put you into profit. That's basically what that risk return ratio says. So that's a very high risk return ratio, a very good ratio. You can afford to have 19 losers and 1 winner and still be in profit. So that's a general overview of the calculator. Now, I must stress, this example that I used 5% to make 100%. When you start using this top-up calculator, start small. Use 2% to make 10%, 3% to make 15%. Start small until you have enough confidence in your training ability to use those kind of numbers. So don't jump into the deep end straight away if you can't even swim. Start small and slowly build up as you're using this calculator. Now, when you purchase this calculator in our forum, we have a special forum for the calculator, and you'll see in the forum there are 6 example top-up strategies for, if you're starting small, for 40 pips, for instance. If you just want to go for 40 pips, risk 5% to make 30%. So that's the kind of starting point we suggest, and use 3 top-ups. Or you can use a 60 pip trend, 5% to make 50%, and use the 3 top-ups, or use 80, so, and then you build up into the bigger numbers. You can do a 100 pip trend, risking 3% only, so your risk return ratio becomes tremendous, but you'll only go for 50%, or you can go for 100 pip trend with 5% risk, risking 100. You can even go for 180 pip trend, risking 5% to make 200 with 3 pop-ups. So I hope you're getting a feel of what this top-up calculator does. It looks very simple, but those calculations are very complex, and they are almost impossible to do when you're under pressure and hurried. Whereas using the calculator, it's pretty easy to do. So let's have a look at the actual website. Okay, so here's the website, and as it says, the topic of this video is basically the same as the website here. It says the Expert4x Topup Calculator is here, and I'm going to let's look at the banner that's running there, and I'll explain how this works. It is ideal for US traders. There's no hedging or no FIFO complication. Leverage and margin requirements are taken into account, as I've shown you, and you will get a warning if they don't comply. Calculations are done on a risk-free basis, but you can also, there is a setting where you can do it on the initial risk basis. So in other words, your other top-ups can be done at your initial risk, and that will increase the size of your stops. Automatic access to all currency information. As I said, it looks all those currency informations up for you. Sample strategies are applied. We've just seen that. Okay, so if we move lower down, you'll see there have been, I think, up to about 40 double in a day examples of trades where people have gone for, used 40 pips and 60 pips and 100 pips and 180 pips. So there's a huge amount of examples that you can look at that people who are using the actual EA used to double the risk amount that they've chosen. Then on the website, we also use our marketing pages as training. So what I've gone through in this video with you already is explained again in the actual website. You can see there, and then there's a discussion of the actual output again. I won't repeat that. And there are the 6 sample strategies that I've shown you available in the forum. Then you can purchase this calculator for a launch price of $59. And I must stress, this is a launch price. That price can go up at any moment. Now, I hope I've given you enough information to decide whether this great tool will add value to your current Forex trading by topping up and increasing your gains tremendously when you trade. Please visit the Topup Calculator webpage for more information. I hope you enjoy this Forex trading tool. From me, Alex Employee, cheerio.